thanks everyone for having taken the risk of joining the meeting again today. Uh, it's been quite a learning for me, and these 5 days, which has been the 5 days in the interim, has also not gone waste. My thought development has improved, and I hope that after today's meeting it will further improve. So I have a lot to gain by this by leading this group discussion. There have been quite a number of reactions coming from people relating to certain propositions which I said in the last meeting, of course, in other forum. So I would like to just touch upon those aspects again as a I always believe that it is it's quite detrimental to be firm and consistent in your thoughts. If you want to really grow, then you need to think and think again, revisit the established propositions to verify, validate, and maybe even change your propositions. So I'll take, with that spirit in mind, I'll take those aspects as we in the beginning itself, one or two aspects which was touched upon, especially relating to what would explanation 2A really apply to. Going by the simple literal meaning of these words, it looks like any transaction under the sun would get dragged into this SCP provision. Is any imports which takes place would be dragged into the SCP provisions unless and until there is a shield of the treaty available to the seller, available to the non-resident, if I put it like that. So with that in mind, let us understand what is this, what is possible or what could happen going forward in the courts. At the end of the day, these things will get determined, these interpretation issues will get determined in the courts only. It will not get determined by the AO or even at the lower appellate authorities. So just to get a flavor of what these changes could be, if and whether even those changes could be are really possible, is what we will look at now. So we started with this, the classical business connection. Then we talked about the BEPS action, the BEPS plans, where they talk about the ability of a company to have significant digital presence in the economy of the other country without being liable to tax due to the nexus. Under the current international rules, the current international rules are the permanent establishment rules. They are not the business connection rules. So let's be clear on that. We are talking about the international cross-border taxation as captured in the BEPS action reports. So let's proceed further. Then we also have evidence of purposeful and sustained interaction with the economy of the other country via technology and other automated tools. So again, we are not talking about a physical presence like a permanent establishment. They are asking something more. The permanent establishment concept as such has failed is what the general consensus is now. Though it took quite a number of years for the international community to accept and concede that point. Also, they have talked about the attribution should be, or not attribution, even the presence, the significant economic presence they're talking about as what is required is as a potential option where revenue threshold combined with digital factors and user-based factors. This was the thought process in the Action Order Report 2015, which sowed the seed for the SCP under Explanation 2A under the Act. So a link was required between the revenue generating activity and its SCP in the country.
Now, hi Ganesh, sorry to interrupt you. I think there is some background noise from your side.
Okay. I think I had off the fan. Last time also we faced the same problem, right? 1 second.
Yeah.
Okay. Is better now?
Way better. Thank you.
Okay,
and
fine.
Sorry for putting you through the discomfort.
It's okay. This is not discomfort is not restricted to only today. It's been last 15 days when I was preparing for this. So anyway, there's an enlightenment. So pillar one blueprint, going forward, is what happened in pillar one blueprint. Again, they talked about two in scope transaction, in scope uh, transactions or activities, whatever you want to call it. In scope services is what I would call. Basically, automated digital services and consumer facing business. So here there has been a clear departure from digital, taxing the digital economy, which will be restricted to digital goods and digital services, to moving to physical economy as well. And this has been adopted in the OECD G20 reports relating to taxation of digital economy, which is Action 1, which got renamed as taxation of digitalized economy. So basically, we have transaction in physical goods like in consumer facing businesses, which are now subject matter of discussion under this Action 1. So we need not be too surprised or shocked that explanation 2A includes physical goods. This seems to be the understanding internationally, that we need to have even physical goods to coming into the discussion. But of course, the factors for nexus would be a revenue threshold plus a plus factor, as they called it. A plus factor would be a physical presence by way of an agent or a group P or even a subsidiary, and a deemed engagement provision where a particular level of activity represented by a threshold of turnover would indicate that the group has sufficient presence in that market, because it would not have been possible for that company or the group to perform or achieve that level of business without some supporting activities on the ground. This is basically the deemed engagement provision. So now this is why I'm going back to these slides are basically just to draw a parallel between our explanation 2A with all these developments internationally. Now what we have, as I said, physical goods are definitely covered under the pillar 1. So they are under the explanation 2A. So there is nothing really surprising or shocking about that. The factors they are talking about is a deemed engagement provision is also something which you find echo in our the threshold which they are fixed of 2 crores. But of course, it seems quite incredulous that a company or a non-resident who has a 2 crore turnover with parties in India would be having that level of activities on the ground, which could be deemed to have existed. So basically, a deemed engagement provision for a level of 2 crores is like seems ludicrous. A deemed engagement provision for a threshold of 200 crores might not be so ludicrous. So, but the point is, the 2 crore limit is a deemed engagement provision. We might argue about the quantum of the threshold and any other factor unconstrained by physical presence. These are all the nexus which has been discussed as affording a consumer-facing business a source tax or source-based taxation. While in automated digital services, they only said a revenue threshold is adequate because these services have the potential to operate remotely and can be presumed to do so. Because you can't expect an online advertising service or online search engine to be having large physical presence. They would be doing large amount of things digitally and through remote and remotely. So then, after having understood having revisited the pillar 1, then of course, as I said about the physical goods being part of the discussion right from 2015. So as I said, it is nothing to be surprised about. Then we have the Parliament, the memorandum which introduced the Finance Bill 2018, talking about all these factors of Action 1, the Action 1 plan, the economic allegiance they're talking about rather than physical location, and new business models operating remotely through digital medium. The non-resident enterprise interact with customers in another country without having any physical presence in that country, resulting in avoidance of tax. So you have basically issues which have been discussed in these various reports being picked up in the memorandum to give you the flavor of what this SCP is all about. So we have talked about it is the last 3-4 lines. It has a significance significant it should mean economic presence in that country on the basis of factors that have a purposeful and sustained interaction with the economy by the aid of technology and other automated tools. So that is exactly what they're talking about as significant economic presence. The law is silent about all these, right? So let's keep that in mind when we look at the interpretation, when we come to the interpretation part. I will not talk about the constitutionality. We will leave it for the moment. Now we have these cases being quoted by India as in response to the USTR 301 action. India's comments, they refer to the Wayfair case, and they also refer to the various IP intellectual property cases relating to jurisdiction. One point which strikes one is basically in the Wayfair case, it was not a question of whether sales tax was leviable by South Dakota on the sales made into sales delivered into that state. It was more a question of whether the out-of-state seller can be imposed upon a liability to collect that sales tax. So basically, when there's a B2C transaction, you expect the consumer to make the payment of taxes. It doesn't happen. It doesn't happen in India. It doesn't happen in the US. We always are ready to go ahead without asking for a bill. So even in the US, the things are no different. So though there was a liability, there was a law which levied sales tax on imports into that state. They were not able to collect that tax. The question was about the collection of the tax, whether that collection of tax the responsibility can be imposed upon an out-of-state seller. So in that context, the US Supreme Court said that a business may be present in a state in a meaningful way without that presence being physical in the traditional sense of the term. Such an excess is established from the taxpayer or the collector. So this is what they're talking about. Avails itself of substantial privilege of carrying on the business in that jurisdiction. This quantity of business could not have occurred unless the seller availed itself of the substantial privilege of carrying on business in South Dakota. So again, this nexus or virtual presence of the collector of tax in that state was the reason why the collection, the liability to collect that tax was imposed upon the out-of-state seller. As I said, it is not related to the imposition of tax itself. Same way in your World Wrestling and Entertainment, which is a Delhi High Court ruling. This was the ruling was in relation to that whether the Delhi High Court had territorial jurisdiction to entertain an infringement suit. So basically, here also the arguments were the same of the plaintiff. Plaintiff was the World Wrestling Entertainment Inc., which was wanting to file a suit against the respondent in Delhi High Court. So and they pleaded that they have presence in Delhi. So as against in a tax matter where you wouldn't expect a non-resident pleading presence. So yeah, the plaintiff pleaded presence in that state because the transactions were done through a website placed virtually, where it's like a shop in the physical world, and the transactions were concluded in Delhi. Essential part of the business of the plaintiff was in Delhi. Customers were in Delhi, and everything took place in Delhi. So plaintiff was held as regarding carrying on business in Delhi. So the Delhi High Court assumed the territorial jurisdiction to accept that suit. So again, as I said, this is about the presence or a virtual presence in the context of a territorial jurisdiction and not in the context of imposition of tax. But these have been straws in the wind relating to whether there can be a presence without being physically in a particular jurisdiction. Anyway, this is apart from this. Now let us say we will not. Oh, sorry. Okay. Now this is also about an intangible business connection. Virtual and intangible business connection is what the Mumbai Tribunal held. But with due respect, I believe that all business connections are intangible. Can't expect a business connection to be tangible. A business connection implies nothing more than a relationship with maybe a physical person in the country. So what probably maybe the honorable tribunal meant was possibly that having a business connection without having a presence in that, without having a presence or without having any operations in the other state. But point is, classical business connection does not accept that proposition. there has to be some operations in the other state, and operations imply operations to be carried on by a human agency. So to say that I have a presence in the other state without operations is not possibly taxable under explanation 1A of section 9.1, which is why I commented that this ruling is maybe ahead of its time and echoes the SCP provisions, because SCP provisions do not talk about having operations in India. They only talk about transactions with the person in India. So this is possibly ahead of its time, and for the existing law, maybe this needs to be reconsidered. So now this explanation 2A we have seen, whatever it is. Now let us look at why did I say that transaction in respect of any goods, services, or property carried out by a non-resident with any person in India needs to be qualified by some element of remotely operating in the Indian market. It can't be merely a buyer in the Indian market is adequate for an explanation 2A to constitute a business connection. Now I'm saying this as a proposition. I'm not saying this that this is the law as one reads it literally. So this is why I brought in these extracts of the case laws, very classic case laws, for just to give us a feel of what you can expect going forward in the courts. So what we have in Cape Brady is basically in a taxing act, one has to look merely at what is clearly said, and there is no room for intendment. The very famous judgment which says that there is no presumption, you have to read things as they are. One can only look fairly at the language used. While you have in Dilip Kumar, which is a customs case, it said that the legislative intention, what I marked in brown, the legislative intention, that is a true or legal meaning of an enactment, is derived by considering the meaning of the words used in the enactment in light of any discernible purpose and object which comprehends the mischief and its remedy to which the enactment is directed. So now, for us, basically this was also espousing the Hayden's rule, but the point is the legislative intention has to be seen derived by considering the meaning of the words used in the enactment. That means I don't need to look at other external aids. I have to look at the section itself to understand what the legislative intention was, because it will be very myopic to say that I will read the words as they are, because I can give you at least two examples in the expression 2A provisions themselves. If I read it as they are, it gives a meaning which is absurd, which is not what should be furthered or what should be accepted by courts, which is exactly what KP Varghese said. A statutory provision must be so construed, if possible, that absurdity and mischief may be avoided. So you have a literal meaning which is coming out of the explanation 2A, which states transaction in respect of goods, service, or property, without any qualification of how those transactions are carried out. We have the background, what we saw, that the background cases and developments internationally, as well as what is of which India has been quite a serious participant, and in Indian legislature has given an intention that to introduce those concepts into the Indian law is why SCP was introduced. Now, with this background in mind, if I look at the legislative intention and read the words as they are, I need to discern a meaning which will make sense. Why I believe that today the words do not make a full sense is basically I will look at 2-3 reasons. One is basically you have the classical business connection. Right now, if I do not, if I read explanation 2A as including everything under the sun, then there would be no need for explanation 1A to continue. The classical business connection need not continue. So if that cannot be the interpretation which one should give to explanation 2A, that is the first point. Second point is the words through digital means was deleted from clause B. We'll see that in the coming slide. It is there. Anybody who has read through explanation 2A would immediately have noticed that this through digital means was deleted. And question is, why did they delete through digital means from clause B. The one premise could be they deleted they explained through digital means from clause B because those words were absent in clause A. And the idea was for both A and B, they wanted the automated digital tools and the remote operations to be equally applicable and not applicable only to clause B. That could be one reason. So the amendment in the clause itself indicates that they do not want to qualify the subclause A or subclause B of explanation 2A with through digital means, not for the reason that they want to attack even the physical means, but they want to keep the scope open for all sorts of remote performance of business with India. So that could be one reason why this has been brought in. So now you keep these things in mind. Like basically, then what happens is like now basically if you look at like this absurdity, if you tax everything, all imports, it leads to an absurd situation, because a person in India who buys a goods would not be adequate as a nexus, because nexus is too tenuous, too tenuous, and it appears fanciful. That would mean you would have a risk of the provisions being struck down as extra constitutional, extra territorial. Why I'm saying that is basically a territoriality. There has to be a nexus, but that nexus has to be with India, and that nexus should not be illusory or fanciful. It should be real. Now, just a presence of a buyer in India, is it an adequate nexus? You look at section 916, 917, where they talk about the resident, the payer being a resident, and who uses that right service or information in his business in India, or for earning or making source of income in India, or a non-resident who uses it for a business in India, or earning or making any income from any source in India. So there is an element of utilization of those right property or information or those services into the Indian economic landscape, which is why you're bringing in the you're saying that nexus is there or nexus is sufficient. So these points really indicate that legislative intent is important. You might refuse to look at the memorandum, because there are case laws which say that memorandum need not be looked at if the words are clear and unambiguous. But I believe the words are ambiguous because because of the words have to be interpreted in the context in which they appear. They can't be looked at as a sentence, as an English sentence. The context in which they appear is in section 911, which includes classical business connection. You want the classical business connection has not been done away with, so you expect both to coexist. To bring a meaning to the entire in the entire context is when you will make some sense out of explanation to it, which is why I was proposing a purposive construction is what will happen going forward. I hope this sufficiently explains my thought process on this. Now, this was one point which was raised: is business with India and business in India, is this position changed? But I believe that this proposition of business with India and business in India is largely on the aspect of accrual of income, and it is not on the not on the deemed accrual. What we're talking about, the business connection. The point is, if the business is with India, is when you could have an SCP dragged in because of the transactions. Transactions cross the threshold of the business connection, either classical or SCP. Does SCP also drag in other income like capital gains interest? We'll discuss that aspect in the next slide. We'll come to the data later, then we'll come back to that. Okay, before we go to the provision of data, we'll just discuss this, because these are all holistically they can look at the total SCP or they apply to the entire SAP and not to clause A or clause B. Now, there are limitations available in classical business connection: purchase of goods for export, shooting of cinematograph films, diamond center display. There's a new provision, new subclause E, which has been introduced in the explanation 1. Sales through independent agent, which is explanation 2. Sales by dependent agent who does not conclude contracts. Now, these are all limitations from classical business connection. Question is whether these limitations also will apply to SAP. The first point I would make is, when we look at transactions in respect of any goods, services, or property, they don't say sales of any goods, services, or property. A transaction would include a transaction of purchase as well. So when we have a non-resident purchasing goods for export from India, whether that will, which is excluded from the classical business connection, whether it will also be excluded from the SAP, I would believe yes. If you look at explanation 1A, they have excluded a business connection coming through SAP. There is no such exclusion in explanation 1B, 1C, 1D, 1E, or for the matter in explanation 2. So the SAP exclusion is there only in explanation 1A relating to attribution of income, reasonable attribution of income for operations carried out in India. So I would believe that all these exclusions which are there for under explanation 1 should apply to even explanation 2A, because explanation 2A is only defining what is a business connection, defining that a significant economic presence would constitute a business connection, and what is that significant economic presence. That is all it does. While explanation 1 defines, for the purposes of this clause, which is basically all income accruing or arising directly or indirectly through or from any business connection in India. This business connection in India, which is there in 911, includes an SAP. So explanation 1, excluding explanation 1A, which there's a specific carve-out, where there's a specific carve-out, we have explanation 1B, 1C, 1D, 1E, all qualifying business connection in section 911, which business connection includes an SAP which is constituted to be a business connection by virtue of explanation 2A. So we have to keep this in mind. Let us say there is a purchase of goods for export of beyond 2 crores from India, which is a transaction in respect of goods, a transaction with in respect of goods with by the non-resident with a person in India. It would still be exempt from the definition of explanation, from the definition of business connection. I don't need to worry about explanation 2 to have a separate carve-out for explanation 2A. So now coming to the second bullet, this was one of the points which was raised in the last session. So what does it say? What was the issue? Issue was basically, if there's an explanation 5 relating to indirect transfer, and there is an exclusion, whether SAP can apply, whether it can be caught under SAP. So now if you look at section 911, there are 4 limbs to 911. That is basically through or from business connection in India, or through or from any property in India, or through or from any asset or source of income in India, or through or from a capital asset situated in India. So there are 4 limbs. Now explanation 5 ideally applies to through or from transfer of capital asset, through the transfer of capital asset situated in India. So basically, there is a circular of the CBDT also, where there was a question whether dividends received from a foreign overseas company, whether it will amount to income from transfer of a capital asset situated in India. The CBDT rightly held, no, it will not. That limb explanation 5 only applies to the limb through transfer of capital asset situated in India. So we have explanation 5 limited to only the 4th limb of explanation of section 911. So obviously other limbs should not apply. Now also another point is, though this is on the if you read a plain reading of 911, it talks about all income accruing or arising through or from business connection. So which would include all income. It doesn't talk about what income. Now income from a business is wider term than a business income. So I would believe a capital gains arising from a business let us say a business asset is being sold, it's a capital gains arising from a business, is income from business. Maybe it is not the business of the entity to sell its fixed assets, but since it is something which is done in the course of the business without the business being shut down, I would believe it will continue to be income from business, though it will be taxed under the head capital gains. But that doesn't mean anything. It will still be covered under all income accruing or arising through or from business connection. But because 911 explanation 5 is limited to the fourth limb through transfer of capital assets situated in India, you would not have explanation 5 which is not triggered because, let us say, of a de minimis provision under explanation 7 will not get caught under SCP. The idea is you have separate provisions in section 9 for separate for different types of income. Once it falls under a particular type of income, it will not be applied. The other clauses will not apply to that provision. We have a flavor of this also in royalty and FTS, which we will come to. Royalty, FTS vis-a-vis business connection. So now these are the points which I wanted to say vis-a-vis the overall aspects which came out from last meeting. So now let us go to, unless anybody has anything, we'll go to the explanation. We'll go to the provisions proper. Any questions are there?
No questions, so we can continue.
Very good. Let us continue.
Yeah.
Sorry, go ahead.
No, I think there is only one question in chat box which you have already addressed, Ganesh. It is that Tejas is writing that business with India and business in India was with reference to business connection under section 9(1). So this you have already covered. And then Ronak has posted a question. Your view is imports from foreign company is not included in SCP.
No, my view is not that at all. That has to be the view of the courts. And today you go to the AO. He's going to catch you on this. He's not going to let you go. He will say literally when what you read is this. But I'm giving you a thought process that by that interpretation of explanation 2A, what you have is explanation, your classical business connection and explanation 1A becoming redundant. That cannot be the intention. So obviously you need to purposefully interpret or purposefully construct, give a purposive construction to explanation 2A, and then look at the remote factors which bring in that understanding. Now these remote factors are not of my own imagination. The CBDT has come out with the remote factors in the draft attribution report which came out in 2019, which I'm one or two slides are there. I'm taking up on this. There they have looked at these factors. It is not a pure transaction in respect of any good, service, or property. Did not really amount to a business. Did not amount to a business connection, and you are caught. The other factors will have to be taken into account. Yes. So I'm not. My view is not that import of foreign company is not included. I wouldn't say that. I would say one has to be a little more circumspect. I would have a happier position where if the CBDT had clearly or clarified this aspect going in the provisions or worded the provisions a little more unambiguously. But that doesn't mean those words need to be looked at as only cast in stone. Now, when you're asking whether it should be, you have to have a 195 in cases, very difficult. So then that's when you take the assessee, hold his hands and take him to the courts, no, to get a proper meaning of the words, right? Okay.
Thanks, Ganesh. Thanks. Go ahead.
No, if you have an officer who is ready to give a purposive interpretation to explanation 2A, then you should take it. You should not question him. But I don't think it is going to happen. Okay, we discussed this 2A. We will not revisit 2A. Now, in with any person in India, we had a brief discussion last time. I'm just revisiting that because I had sharpened my focus on this slide a little more. So isolated sporadic transactions also are covered because we are talking about only a threshold of 2 crores during the previous year. So it is not about whether it is a repetitive continuous transaction with India, as we have come to understand classical business connection. So even isolated or sporadic transaction, maybe a one single transaction of about 2 crores could also get covered under SCP. Though now I'm going on the literal meaning of the words and not the purposive meaning. Purposive meaning could give you a different answer altogether. But we are now interpreting and understanding the provisions. So we cannot just hark back on the purposive interpretation and not interpret the provisions, and that will leave the audience hanging. So let's understand that. Let us look at these words. Now, transaction to be carried out by non-resident with any person in India. These are the words. It is not about any. It is not any person resident in India. It is any person in India. So in an equalization levy, we have to a person resident in India. So there is a dichotomy. Both the provisions are speaking different languages. Situs of the transaction, place of supply, or place where consideration received are not relevant. Right? What is relevant is the transaction carried out with any person in India is what is to be seen. If you keep that in mind, literally interpreting it, what does it say? When he is in India at the time of the transaction, I would believe if he's a resident and the transaction with the non-resident is the transaction the non-resident has made is with the resident, and the resident is in India at the time of the transaction, obviously it is covered. There is no doubt about that. Now, if the person is a non-resident, the buyer, let us keep a simple example of a seller and buyer. Though, as I said, SAB provisions are applicable equally to a buyer and a seller. So, if you look at a non-resident, if he is in the transaction of the non-resident is with another non-resident who is in India at the time of the transaction, will be covered. When a person, the buyer is not in India at the time of the transaction, should not be covered. Let us say I go, like I travel abroad and buy some goods abroad or take some services abroad. Obviously, you can't expect the supplier to be discharging Indian tax liability. That is not sufficient nexus for the provision to even go beyond the Indian shores. So obviously, if it's a non-resident, it will not get covered. At any time in India, even if not in India at the time of the transaction, I would still believe it will not get covered. What will be important is the transaction, the point in time would be the time of the transaction. It should not be any time before or after. So that is the reason why you have a person who's resident in India might not be covered. He has to be physically in India at the time of the transaction. In implies a physical presence in terms of space, time, or any other any such criteria. So a physical presence is what we are looking at. Now, having a branch in India, though transaction not related to the branch, so a little doubtful. The person is in India. He has got a branch, the buyer, and the transaction is with any person in India. There is no qualifying condition like we have in 916 B or 916C and 917B and 7C in SCP. If you read the words literally, it will be with any person in India. The foreigner or a foreign company has got a branch in India, so it is in India. So it should get covered. But the other view could also be that there is an erosion. If it is not relating to the transaction of the branches, then it will not be claimed as expense of the branch. There will be no erosion. But the point is not about whether there is a base erosion. The point is whether a non-resident who is legitimately to be taxed on remote selling to India, is he being taxed or not? It's not whether the amount of the transaction is available as a deduction for somebody else. That will, by that logic, you could have any B2C transaction where there is no deduction being claimed by the consumer, would never be included then. But that is not the logic. That should not be the logic, at least. So, I'm ambivalent. I've kept it. It could be either having a dependent agent in India, though transaction not relating to the branch, not relating to the agent. I should have meant. I would believe it will not apply because a dependent agent is one who is in India, not the non-resident. So with any person in India, the transactions with the person in India alone is covered. If that person has got a dependent agent in India, it will have no relevance to the term with any person in India. Having a business connection in India, though transaction not relating to business connection, again will not be covered, because a business connection, as I said earlier, is a relationship. The person who is in India is somebody else than the non-resident. So obviously the transaction is with the non-resident. So the transaction is with any person who is not in India, so it will not get covered. So this, with any person in India, is a nexus which you are talking about here. Now, which is why this becomes very important to understand what this with any person in India means. So we have dealt with this slide. Somebody raised a question last time about a poem, a person having a poem, the buyer having a poem in India. I would believe it will still not apply, because what we are talking about is any person resident in India. We are not talking about any person resident in India, either as a under poem provisions or any other provisions. We are talking about any person in India, being that is basically being physically present in India. A question can come whether a company or an entity or what is called a corporate entity can have a presence in India, but the presence will be always in terms of a business presence, will be in terms of its personnel being located in India. So ultimately it will be a physical presence and not a virtual presence. Right? So let's proceed. We discuss this. Now let's come to the downloads. Now, if we say provisions of, if transaction of any very complicated question, could force of attraction be triggered in case of business connection, dependent agent branch in India? I would believe that there is no force of attraction rule in the under the Indian Act. So I don't know why would you believe that? So this is a point which Tejas is raising, that if a transfer of goods happening in India between two non-residents, will become taxable in India. Both the non-residents are not present in India. So if they are not present in India, this whole provision should not get triggered, is my belief. When I'm talking about a presence in India, when I'm talking about a person in India, I would believe in India implies a physical presence, cannot be a virtual presence. So I hope that answers the question, but the question is very long. I'll read that explanation. Non-resident 1 example. Non-resident 1 buys goods from Indian resident at FOB India port, also sells goods to another foreign customer. Indian resident will file for bill of lading in favor of NR1 normal course. NR2 will be able to take delivery based on NR1 invoice and bill of lading. Will physical presence in India critical? Yes, obviously, without physical presence of the counterparty in India, I would believe that the person in India requirement will not get covered. Okay, let's proceed. Now, what we have is transaction in respect of any good, service, or property, and we have a transaction for provision of download of data or software in India. Now, what it says is includes transaction for provision of download of data or software in India. Whether this inclusive provision does anything, does it really expand the scope of transaction in respect of good, service, or property? I don't believe so. One example of literal meaning leading to absurd results is this, that if one says a transaction in respect of good, service, or property, including, it doesn't say includes, including transaction for including for provision of, one second, no, it says transaction in respect of any good, service, or property, including provision of download of data or software. So if one absurd meaning could be that unless the transaction in respect of goods, services, or property contains an element of provision of download of data or software, it should not get covered. So that is a risk of a literal interpretation, which we saw even earlier, where we said that where the provision says significant economic presence of a non-resident in India. Are we talking about a non-resident in India whose significant economic presence is there, or are we talking about a significant economic presence in India of a non-resident? So the language could have been better, could have been more elegant, but to interpret it in this fashion, to limit the provisions literally, would not get derive much support from the courts. But this I thought I'll bring it out so that a literal meaning, as we we are all talking about in the earlier slides, transaction in respect of good, service, or property includes all transactions, would also lead to that absurd result. So then, provision in India, what does it mean? It just talks about the access to download should be available in India. A download would be various types. We have a software in the cloud. Okay, when software is downloaded on a computer memory, which is transient. Are we looking at a download which is a permanent download which can be stored by the user alone to be covered, or are you looking at even transient download which gets wiped out once you off the session? So now that's the provisions are provision of download of data or software. Is it a transient download? Is it really a download adequate, or of a download of such degree that you can say it is provision of download? Progressive, of course, if you look at literally, there is a download. Once there's a download, there is a the provision, the inclusive portion is covered, is one view one can have. Progressive download was a true streaming. This is one other variation which is possible, which talks about data is downloaded in stages, which is progressive downloads, but may still not be permanently stored on client's device. While in true streaming, what we have is a temporary storage in client buffer to compensate for potential difference in rate. Data is received and rate it is processed. Buffer of less than 2 to 5 seconds. The point is it the transaction for a download sufficient when in such transient cases? So am I paying? A transaction implies a consideration passing. We are talking about two people, a consideration passing. So have I paid for a transient download, or have I paid for something else? Would be a question. Whether content should be permanently stored, whether it is relevant, again, whether it should be downloaded on my device, or it can be downloaded even elsewhere, whether it is possible. Like I came across one US case where the technology was captured. The technology of the respondent captured the broadcaster's TV signals using thousands of remote antenna, and the content was made available in the cloud. There was a download. The download was in the not on my device; it was in the cloud. So now these are all factors which play a part in determining what is download. But my bottom line is this doesn't add much to the earlier part, transaction in respect of goods, services, or property. A provision of download of data or software, which is a transaction, would anyway be a transaction in respect of goods, services, or property. So really, these extra words have not added anything other than a little confusion in our minds. It is not really added or given any clarity. Unless we go through the literal meaning, what I said, which my view is a little aggressive, to say that a transaction in respect of goods, services, or property will apply only if it includes provision of data, provision of download of data or software in India, which I think, as I said, is quite aggressive as a position. And I believe incorrect, because that is not the intention of the legislature. Then download of data. I'm still laboring this point because this is there in the provisions. But as I said, I would not spend so much time looking at all these things. I would really look at transaction in respect of goods, service, or property to sufficiently cover all these variations or all these types of transactions. Download of data. Now, whether the data is sold or licensed, is it transaction is data goods in the first place? I would believe yes, data is goods. Transaction in respect of copyright and data, I would believe that also is goods. There's no problem there. But whether data is available for download in India or merely exported by a non-resident buyer outside India, I could buy data from an Indian player, right, and use it outside India to better target Indian customers, let us say. There is no download of data in India. One can say there's a download of data outside India. So the question is, when there is no provision of download of data, whether this portion or this transaction where I have, as a non-resident, I have acquired rights in Indian data, let me put it like that. And look at it the other way, where an Indian or person in India has acquired rights in a data belonging to the non-resident. In that case, there would be a download of data. But the point is, in the transaction where the non-resident buys data, one can say that there will be no download of data in India. It will be actually a download of data outside India. And where a transaction, where a resident buys the data, then possibly there is a download of data in India. So now these are all the variations which are possible in download of data. Whether royalty, now data could be royalty. Royalty would be basically in respect of imparting of data relating to patent, imparting of information concerning technical, industrial, commercial, or scientific knowledge, experience, or skill. These are covered under royalty. Now, if they are covered under royalty, what will happen to explanation 2A, provision of download of data or software in India? So I would, this is the same issue will be there in software also, which I'm taking up in the next slide, and then we will look at the answer to this controversy or this complexity. Of course, download of software is not limited to computer software. Software is not defined, though computer software might be. So question is, would it include film software? Would it include music software? Could we include all types of software which is not a computer software? That means it's quite wide. Now, what does your explanation 4 to section 916, which talks about right to use and right for use computer software, versus explanation 2A, which deals with provision of download of data or software? Now, what will be the inter se relationship between the two? One is contract based, because when you're talking about a right to use or a right for use, it's based on contract. Well, again, the other one is against the mode of delivery, provision of download of software. So including provision of download of data or software has to mean including transactions in respect of provision of download of data or software. Otherwise, it doesn't mean anything. Including provision of download of data or software, it doesn't make any sense. One has to read those words. We are talking about including transaction in respect of provision of download of data or software. So, which is basically we're talking about a mode of delivery and not a contract. But a transaction in respect would be a contract as well. Now, a sale of software, explanation 4 is inapplicable. Why I'm saying explanation 4 is of to 916 is inapplicable is basically because it talks about use of or right use. I'll just read those words. Means transfer of all or any rights in respect of any right, property, or information includes, and has always included, transfer of all or any rights, any right for use or right to use a computer software, including granting of a license. So when I buy a software copy from the non-resident, there is I'm not got a right to use or right for use. I own that copy, so I don't need any license from him. So I would believe including granting of a license irrespective of the medium through which such right is transferred. So what we're talking about is a right, property, or information includes a right for use or right to use a computer software. When there is an outright purchase of the copy, it is not for a right to use or right for use. A sale of software would be excluded from explanation 4 as things stand. But explanation 2A will apply if there is a download transaction in respect of, I'm adding those words, in respect of provision of download of software, download of data or software should include even a sale of software. Even a copy which is downloaded, a downloaded copy which is sold is also covered under explanation 2A. A license of software. Now, both explanation 4 and 2A will apply, but what will be the priority? Clause 6, which is relating to royalty, will be the lay specialis. So basically, we have the cases of Meteor Satellite and Corpse Vulcan, which has which has propounded this, which has laid down this proposition that royalty is more specific. It will apply there and not under business connection. So you have software which is a license will be covered under explanation 6, under clause 6, will not get covered under explanation 2A, because 2A will be a significant economic presence constituting a business connection, which is much wider than a royalty in respect of transfer of all or any rights in respect of software, or right to use or right for use software. There's no bar on applying other clauses of section 9 when transaction falls out of the definition. If it is not royalty, then you can look at explanation, you can look at section 911 or any other clause in section 9. But if it falls within the definition of royalty, then the entire source rule will have to be determined by section 916 or 917, depending on whatever section you're talking about. The source rule, what is defined there, is what will be applicable. Now, exclusion from the definition versus exclusion from the rule also we need to keep in mind. Exclusion from the definition would be when it is not royalty, not coming under the definition of royalty, while exclusion from the rule would be basically, let us say it is royalty, but it is for the purpose of business carried on outside India by a resident, or not for business carried on in India by a non-resident. Now, these are the rules given in 916, 917, 7 B and C subclauses. Now, these rules define how a royalty is to be treated for the purpose of deemed accrual in India. So when you look at the overall rule, you should look at the specific category which is self-contained. Once it falls under royalty, you have to follow through for the entire source rule. There will be no occasion to apply the other clauses. So an exclusion from the rule, because it falls out of the rule, will not give an opportunity for you to apply some other clause in section 9.1. So why I'm saying all this is basically, if an explanation falls, if a particular payment falls out of the definition of royalty under 916, 2A will apply. There's no problem there. But if it falls within the definition of royalty, but it falls out of the rule, the accrual rule, which is given in 916B and 916B and 6B, 6C, or 917B, 7C, in that case, you'll still not apply explanation 2A, because it is still a royalty.
Ganesh, hi, we have questions here, and I would start with a question which I have. So
tell me.
If you continue on the same slide where you were, so on sale of software, we discussed that explanation 2A shall apply if it is a download. Now, typically, Ganesh, what we understand is in these days, there is no hard copy delivery of the software, etc. So many times a link would have been given, and user or the purchaser of that software may download the software from the link which is given. So then, are we saying that in all those cases, it will be covered, and then one basically have to see whether it is royalty or not. And if it is not a royalty, then you have to go back to the SCP provisions, otherwise not.
Correct. I agree with you.
Sure. Okay.
So basically, I'm saying if it is royalty, you don't look at 2A. That's all I'm saying.
Right.
If it is royalty, don't look at 2A. Don't worry about the source rule, which is under 7916 ABC.
Right. Now, there is a question in the chat box which reads that explanation to section 9 subsection 2 also in a way provides that clause 916 takes precedence. And is that understanding correct? And because it uses the phrase whether or not the non-resident has business connection in India.
So the explanation 2, explanation to section 9, no? Basically, not 9.2 actually. So explanation to section 9 was brought in after, I think, your Ishikawa-jima, right? Ishikawa-jima happened in 2007 or 8, I think. Now all these cases, Scope, Sulcan, and Meteor Saturday are in 1980s. So even without those provisions in the statute, that was the understanding.
Correct. So Ganesh,
Right.
yeah, even I did not understand very clearly what is the question, but yeah, so Ishika Majima was, the amendment was brought in 2007, and that was with a rationale that irrespective of whether services are consumed in India or not, rendered in India or not, okay, even in that case, 917 will still apply irrespective of the business connection or not. So,
Yes.
I mean, so the question is, the question, it is from Mukesh, and I think Mukesh, their question is whether the specific provisions will take priority over SCP, which I think Ganesh has very amply dealt with.
I would believe yes, specific provisions will take priority. But anyway, that I'm saying I don't need to worry about explanation to section 9. It is not 9.2, it is section 9. And I don't need to worry about that. Irrespective of that, I would have followed the lay specialist rule, which is laid down by the Madras High Court in Cope Sulcan and Meteor Satellite. But I agree to the point that 9.2 also maybe gives that that interpretation. Right?
Yeah. Siddharth, you have a question?
Sure. So I think just Monica, picking up from some of the questions and the comments in the chat box. So Ganesh, one of the common questions which one or two participants have raised is if the transaction is not royalty, and especially keeping in mind the Supreme Court judgment now. The question is, should we examine explanation 2A first, or should one have to examine equalization levy first? So I think almost 3 people have raised it in different forms, this question.
So let's have a little patience, because I've got a few slides on that, which we'll take up now. It's just coming immediately after this. So we'll discuss that. I'll keep it on hold for the moment, because I spent quite a bit of time trying to understand, unravel the interrelationship between your EL, SCP and royalty. Very interesting, but not very difficult. It gives you a clear flow of or the priority in application of these provisions.
Okay. And I think another question which is being raised by Piyush Bafna is if the download of data has been done through VPN by relocating the country from India to any other country, can the said explanation be circumvented as the download has not happened in India?
So what I would look at is where did the transaction take place? Is it a transaction? First question is it a transaction with the person in India? Now, if the person is in India when he did the transaction with the non-resident is attracted straight away, including provision of download of software, data or software in India. So the provision implies accessibility in India. Is it talking about delivery, or is it talking about accessibility? Including provision of download of software or download of data or software in India. Including provision of download of data or software in India. So now I can also view it like this, that the data or software being accessible in India is adequate. I might hide it by way of a VPN or whatever, but might not change the proposition that am I a person in India or not.
Agree. I think, sir, please continue.
So we'll finish this, then let us look at this computers. We are talking about this, what a question was raised. Sorry. Computer software, equalization levy and SCP, what I will do and which will trigger where. So license to end user, if there is a license to an end user and TT is not available, then explanation 4 of to 916 will apply. Once explanation 4 to 916 applies, EL doesn't apply. And if EL doesn't apply, 916 applies, then lay specialist, SCP will not apply. Right? I think this is the flow of thought which I had. If TT is available, in that case, it will be a business income, because license to an end user is not a royalty under a TT definition generally. Then EL will apply. I'm talking about downloads. I'm talking about online supply of and online sales. I'm not talking about physical. EL will apply in that case, and in that case SCP will not apply. Section 1050 will exempt SCP application. If there's a sale of copy to end user, irrespective of whether there's a treaty available or not, I would say a sale of copy would be a business income. If it's a business income, then EL will apply. If it is online supply of goods, and SCP will not apply. Then if it is a sale to an intermediary, to a reseller, following the engineering analysis case, irrespective of the treaty, I would believe it is a business income. EL will apply. Provision of download, online supply, and online supply and online provision of services, EL will apply, and SCP will not apply. I also put one more option under case 2, which is basically, I'm calling it case 2, which is if it is the distribution right is available. Now there is for this you have to look at the para 130 of the judgment. I believe there is a scope to have a view that the case doesn't close the reseller taxation from India altogether. There is some foot in the door possible to say that the provision is taxable under 916 explanation 2 or under treaty. That is royalty, and in that case EL will not apply, SCP will not apply. But as I said, this is my personal view, and it's not a popular view. It is not. It's a view which I hold strongly. But then, of course, others can have others can have different views on this, on the case 2 part. But I believe that case 2, there is a clear distribution right available, and it is not shut out by the Supreme Court judgment. It is still possible for the revenue to argue that it is taxable as copyright in India, and it's a royalty under the Act as well as under the treaty. So it's a big risk one people have to be aware about. Subscription-based model, where I pay on an annual basis or I pay for a time period. If treaty is not available, it will be covered under 916 explanation 4, because this is for right for use or right to use a computer software. Once it is covered under 916, EL will have no application, and once since it's also available under its royalty clause applies, then lay specialist SCP will not apply. If it is subscription based and treaty is available, it will be a business income. Under royalty under business under treaty is will not cover a subscription based model. In that case, EL will apply and SCP will not apply. So if you notice the last column, SCP has no application in any computer software payment. If that is so, what is the big deal about these inclusive words, including provision of supply of provision of download of data or software? What in India, what would that really mean? So I believe that they have brought in a provision, not keeping in mind that the SCP and EL will coexist. They expect EL to go away after some time, after the conclusion is reached in the inclusive framework, and they want the government wants India to have taxing rights under the Act, because without taxing rights under the Act, a taxing right under the treaty is academic. So the idea is to have as wide a taxing right as possible under the Act, and which will get limited by taxing rights which is available under the treaty. Maybe an SCP provision will come in treaty, it will be much more limited, and will be probably following the Pillar 1 approach, or maybe the Article 12B of the UN model approach, and you follow the treaty, which is more beneficial to you, and you are out. In cases where there is no treaty, too bad, all the best. So that's the whole logic. So if you see, your SCP provisions do not trigger at all in computer software propositions. I'll go ahead, or any viewers, anybody has got anything to say on this?
Ganesh, two things. So one is, as you rightly mentioned, this is only for computer software, and there could be many other kind of software as well. Mm-hmm. In which case Supreme Court ruling may not be helpful. And there one will typically have to see whether it gets covered in the royalty definition under Act and treaty provisions are available or not, and then take a view. And secondly, while right now even if we come to conclusion, and you rightly mentioned that India may want to reserve the right to tax under domestic law, otherwise treaty would be academic. So there, if at all SCP provisions are applicable, and you are going to touch upon the attribution part of it, but then the question could be that net taxation for non-resident at 40%, okay, versus the gross taxation of 10%. What would be the analysis, or what would be the total revenue which India may be eyeing on that front? And also, we have seen cases in past where for net taxation, if you don't have available records, and if deduction is not available, then non-resident ends up paying grossly 40% on that entire business receipts, which if it has been India. So maybe that could be one more reason of SCP, and you may throw your light on it
So,
and come to attribution part.
So basically, one point I believe is that the Engineering Analysis Center case was on computer software. The entire case was on actually shrink wrap software. There has been a debate whether it applies to downloads. I would believe yes, the case applies to downloads as well. There is no clear. Of course, one can distinguish and say this case was dealing with shrink wrap, so it should not apply to download. But the propositions I would believe do apply to download. The point I raised relating to case 2 was on the distribution right. I feel that there is a possibility that the case can get distinguished on distribution right, again relating to computer software alone, and not on other software. Now the point on other software, what I mentioned was in the context of download of software. The words used, download of data and software, data or software, in explanation 2a. There they are not specified to be download of computer software. They are saying it's download of software. Now a download of software, as I said, could be a film software or a music software or a gaming software, or could be anything which is not a computer software. In such cases also 2a inclusive portion deals with or at least covers those software. Now whether those software will be your engineering analysis case will apply to those software, strictly no, they won't apply to those software, for the simple reason that the copyright law provisions which were discussed in the Supreme Court decision were all relating to computer software and not relating to others. So really there is no occasion to say that a film software or a music software also will apply for the engineering analysis case will apply to a film software or a music software. It will not apply clearly. But of course, one can. The point is whether it will apply to only shrink wrap or it will apply to a download of a computer software. I would believe it will apply to download of computer software also. But of course, there are other views which I have heard on that. So I will leave it there. As far as the attribution is concerned, we'll deal with the draft report that gives you a good amount of insight about the thinking in the government. Now, the draft report was not followed up by a final report, which will amend Rule 10. We'll see where that leaves us. Right?
Sure. Yeah, sure.
So, Lim 2, we'll just spend a little time, not much. As I said, I find this quite academic. Once you have covered transaction in respect of goods, services, or property, then what else is there to cover? So all these are at the end of it really not that don't mean much. There are good amount of words. So what we have here is systematic and continuous soliciting of business activities or engaging in interaction with such number of users as may be prescribed through digital means have been deleted. We discussed that briefly in the what it means for interpreting the overall 2A, whether now through digital means, whether it now would apply to the entire 2A or it will not apply to 2A at all. There can be two views. I would believe it will apply to 2A entirely, not only through digital means, but even any remote business activity which I have with India would be covered, because that is the whole intention of this explanation 2A, or the significant economic presence. Now we can dissect these words: systematic and continuous soliciting of business activities, what it means with user. Of course, this has to be with users. Casual or sporadic activities will not be covered, because they're specifically said systematic and continuous soliciting of business activities. So now here I have a view. I have a question here. Basically, there's a threshold of 3 lakh users, right? now 3 lakh users per during the year, right? So basically, whether it will mean that if the number of users fall below a 3 lakh threshold in a particular year, uh, and would that mean there will be no SCP on that count? So there's a good amount of confusion created by the way in which the entire provision has been designed. When you're talking about a systematic and continuous soliciting of business activities, it veers towards a business connection, what we classically understand, which is basically what RD Agarwal said. But these words are missing in 2A, expression 2A, limb A. Now, you prescribe a threshold, which is an annual threshold. But when you give a condition, it should be systematic and continuous soliciting. Are you looking at only systematic and continuous soliciting during the year? Then it looks very odd to me. So I would believe that it is unlikely in real life. Once a 3 lakh users test is met, it is going to fall down. So what you will have is you will have a systematic and continuous soliciting of business activities, which will be panning across years, and the threshold will be met accordingly on year basis. Is the way I would try to reconcile it. Interaction would be impliedly two-way. It cannot be a passive user or a passive website, which will be out of coverage. Automated processes will be within the scope. Interaction need not be with the human beings. Interaction can be with a bot, quite possible. As long as the user is not a bot, I would believe interaction should get covered. Of course, user has to be a human being. If a user is a bot, then we have a different problem. And through digital means, as I said, is omitted. It's not necessarily online and through any means, but remotely is what I would believe will get covered under limb B. What are inconsequential to all this is these three factors which we discussed last time also, and is there an explanation to section 9 also? Whether the services are rendered in India is inconsequential, whether it is a residence or a place of business is inconsequential, where the transaction or activities is entered into is inconsequential. What is of consequence is with any person in India. That is a nexus what we are talking about in expression 2A. Or with any users if you look at 2B. Okay. Sorry,
sir, just one question here from Manoj Bhai. He's asking if you could go back to the previous slide, the one about continuous soliciting of business.
Yeah.
His comment is it targeting probably apps like TikTok or such other social media apps which don't directly result in tangible business?
You're talking about the soliciting part?
So I'll ask Manoj Bhai to unmute.
Please unmute him.
Manoj Bhai?
The second part, I mean, or.
You're on this?
Or engaging in interaction with.
Yeah. So,
is it something, which actually is just to get a database or, get a foothold?
So obviously, I would look at it. I will take a step back from limb B. I will say what is sought to be covered by this provision. What is sought to be covered is basically, am I having a user base, which is substantial user base with which I solicit business activities? That's one part. Second, am I engaging in interaction with that user base? Now, why would I engage in interaction with the user base? Why would I even systematically and continuously solicit business activities with the user base? Is for business. At the end of the day, either I develop the user base, the value in the user base is of use to others, or it's of use to me myself. So if it is useful to others, maybe I'll get advertisement on my user base. Maybe I can sell the user base to somebody. Maybe I can license it out to somebody who will then use that user base to sell goods into India. So at the end of the day, there has to be an income arising to me. That's all. So now the engaging interaction with users could be a TikTok, yes, why not? It could be a YouTube, yes, because YouTube earns from advertising. YouTube pays its users for the posts. If there are sufficient number of hits, they pay the users also. They are paying for the content. But point is, Why do they even have the business? Ultimately, it either they sell goods themselves or they use the platform to advertise other people's goods. Does it answer the question?
Yeah, I think maybe attribution will be an issue. I mean, I got your point. I think that is going to be a big
We'll
challenge
come
for.
to we'll come to
Yeah,
attribution. Attribution is again as a minefield. But point
yeah,
is transaction in respect of goods, services, or property which will earn income for the non-resident is what is sought to be covered. Mere interaction with the users without any revenue model or without any commercial utility is not what a government is interested in. You
No,
don't
I
make
don't
money.
think there is. No, Ganesh. There may be a chance something like TikTok, which ultimately gets acquired, maybe without generating any revenue, and it is sold. So now the question is, the capital gain is included or not. So there is a huge customer base in India or app user base in India, and assume for a while it fetches handsome valuation, and it gets acquired by between two non-residents. I think there is a possibility of dragging the capital gain also to this.
So now you bring into account it'll get covered in such a case. It'll get covered like we have discussed that in one of the earlier slides. It'll get covered under explanation 5. Once it is covered under explanation 5, can it really get covered under business connection? I don't
No,
believe
why
so.
explanation? No, why explanation? I'm looking at 911 only. I'm not.
So
So so I, I,
if the
so
user
basically, so you say there is a, I mean, decent amount of users in India. Something gets that portal or app gets acquired overseas, and the valuation is basically derived from this thing. Now you don't have any income. No, you don't have any business. There's no tangible income. It is just a investment like private, and there are players for it.
I take your point, Manoj. Either when I sell the business, I sell
Yeah,
the business as a business. I will not be able to sell the users as an asset. It's a database
right,
of users. Basically,
right.
users are not my assets in that sense because I have no control over them. They are there today, they will not be there tomorrow. So they might not qualify as an asset or a property, but a database of users would, yes, and the users do add value, do contribute value to the business. Now, if that business is an Indian business, obviously then it will be covered under your through or from capital asset situated in India. If it is a overseas business, explanation 5 will get triggered. In both cases, the sale of the business or sale of the shares of a overseas company which owns that business will be under capital gains. It will not be under 2A.
Yeah, yeah,
I hope I have answered your question now.
yeah. It will be under capital.
Yeah, so it will not be under 2A, so it doesn't matter. It might add value, but you might not. You will get caught under. It will get taxed under or be examined under capital gains provision and not under your business connection provision, right?
Yeah, but explanation 5 may not apply at all. I think because you're looking at interest in the company.
So we'll park there for the moment.
Fine, fine.
I
Yeah,
don't
yeah.
want to get
Okay,
into
we'll
the
proceed.
indirect transfer
Yeah, yeah.
provisions, but
Fine.
my limited point is, out of the 4 limbs, I will have a business connection which is distinct from through or from transfer of capital asset in India.
Right.
So I'm distinguishing between the two.
Sure.
Okay. Yeah.
Okay.
So inconsequential we have seen. This we have seen. We have discussed this. Now we come to attribution. So we have half an hour to finish this. Around 7-8 slides are there. We'll take it up. So basically, we have explanation 1A, which excludes an SCP other than business having business correction in India on account of SCP. Right? So explanation 2A, second proviso says only so much of income as is attributable to the transactions or activities referred to in clause A or clause B shall be deemed to occur or reside in India. So now income, it talks about income attributable to India and not revenue. So it will be essentially net income. There will be priority to SCP over classical business connection because of the exclusion under explanation 1A. Non-revenue factors indicating remote presence is absent in the law. Question is, can they be read into the provisions? What Kanka Palkiwala says, the latest common edition, talks about a purposive interpretation restricting the attribution only to income accruing or arising by virtue of digital transactions. They actually they should have meant by virtue of digital by way of transactions through digital means, not by virtue of digital transactions. But if they are saying by virtue of digital transactions, they are actually saying that SCP should not apply to even physical goods. But I believe that is now water under the bridge. So that is already we have passed that stage, but to say that even physical goods are covered under the significant economic presence and all the actions which are going on, all the reports, all the discussion which is going on internationally. So that is not possible today to say I will limit it only to digital transactions. But what if you look at the attribution part, what Kanka Palkiwala says is a purposive interpretation restricting attribution only to income accruing or arising by virtue of digital transactions, or by I'll read the word by through digital means of an NR who has an SCP is what should get covered. Now this is something which is being read into the provisions by the commentary. Then explanation 3a also talks about, we'll come to the attribution part a little more, but before that let us look at this. Explanation 3a also adds income attributable to operations carried out in India shall include income from advertisement, income from sale of data from a person who resides in India, income from sale of goods or services using data collected from a person who resides in India. Now this explanation will also apply to explanation 2a in the SCP. The moot point is this explanation 3a only identifies income that is attributable to either operations carried out in India or operations of the nature of SCP. It does not widen the scope of SCP itself. A business connection scope is not expanded, nor is the scope of SCP expanded by explanation 3a. Only in attribution, the income of these nature will also get added to taxability in India. Now let us look at the attribution rule. What we have today is Rule 10. People are aware of Rule 10. It's basically if they are even talking about a percentage of turnover or some proportion to the total profits and gains. Now this has been, of course, ended up in having ad hoc attribution of percentage of turnover as belonging to income. Percentage of turnover as attributable to income from operations in India. Maybe even it will happen in the case of SCP as well. Now, what do we have? The Rule 10 was sought to be substituted through a draft report. This was the report which came in 2019. Amendment of Rule 10 was recommended. It was basically to introduce a supply side and to the demand side. A supply side is basically the attribution because of sales, a market. A demand side is basically market facing, while supply side is what the resources are to earn that income. So basically they talked about the supply side and the demand side, and to have an attribution for demand side as well. Just because the market is there, you are able to make money in India. So the demand side has to be taken into account to derive what income should be attributed to your business connection in India, or for that matter, even a PE in India. This was the whole idea of this report. I will not get into the detailing of the report. I'll take you to the example in the report. This was the example. So, what does it say? They set weights for sales, for employees, for wages, and for assets. And to the extent of these items in proportion to what was in India and what was outside India, the weights were applied. Let's say, for instance, sales. Let's say 80% of the sales are in India and 20% outside, or 80 out of 100 sales, 80 is in India and 20 is outside, is an example. 30% weight is given. So 30 into 80 is 0.24. Same way in employees with respect to Indian operations, 15 into 8, right? 15% of 8 is 0.12. Then we have wages, wages in respect of Indian operations. The one is employees is the number of employees, and assets deployed in India for assets deployed for Indian operations. Again, in India and outside India, that the report visualized that you could have assets deployed outside India for Indian operations. That was the thought process with which this report was made. And all these weights put together, you get, let us say, a total percentage. In this case, it is 0.69. And for users also is there, 10% is the weightage. Straight away you add 0.10. Total revenue, let us say it is 80. That is your 80 revenue from India is 80. Global profit margin determined based on the balance sheets or the accounts, financial accounts of the entity, the worldwide accounts of the entity. So you have 80 revenue, 5% is a global margin, and the profits derived from India will be 4. It's 80, 5% of 80, and profit attributable to operations in India will be 2.74, which is basically 0.69 of 4 is 2.74. So this 2.74 is what will be taxed under the business connection provision in India. Could be even under a PE rule in India, but it was largely for a business connection. So now you look at these weights. They also gave a high user intensity. They gave a higher 20% instead of 10%. So that was a variation which they had given. Let us not get into that. Let us look at these weights. The weights are for revenue. Weights are for number of employees with respect to Indian operations who are in India and who are outside India. Weights are for wages payable to employees with respect to Indian operations. And weights are for assets deployed for Indian operations. Weights are also for users in India. So you could have a person remotely operating from the country, not being in the country and is operating remotely, who could be earning good amount of revenue from the Indian market, which is the demand side we are talking about. The sales revenue we are talking about the demand side. And you have a weight of 30% for the sales revenue. So in these numbers, at least, even if let us say there's nothing in India relating to employees, or for that matter wages for Indian operations, or for assets deployed for Indian operations, or even for that matter users, if none of them are there, even then 0.24 would be a proportion for sales derived from Indian operations or derived by Indian operations. So you have these weights as an indication of various factors which help a multinational enterprise to earn revenue from India, even without having a significant presence in India. If they have a presence, it will be coming under this column. In India, 80. This column it will come under. Without India, these columns, this will be the remote connection with business in India. So you have, let us say, there's nothing in India, everything is outside. A 30% revenue and maybe a user base of 10 would lead to a 0.34 or a 1/3 of the global profits on Indian operations, which should be attributed to India. This was the model which they had envisaged. Nothing came out of it. Maybe it is still in the works, I don't know, but this is what it is. Now, before we go ahead with the attribution part, one small point. Yeah. Explanation 2A talks about only so much of income as is attributable to the transaction or activities referred to in clause A or clause B. It doesn't make any mention about operation in India and operations outside India. So today, the remote business factors or remote connection factors have to be read into the provisions by way of a purposive interpretation. In the absence of that purposive interpretation, you would have a situation where the entire turnover, the entire income relating to the turnover, even though the value is being created partly outside India, maybe a manufacturing is happening outside India, research and development is happening outside India, all that is happening in India is the sales, you would have a skewed attribution of income to India, which should not be the case. At the end of the day, you want a fair share of income to be collected by the Indian taxman. But here it is on a very extreme example. You would have the entire profits, the global profits, being attributable to transactions or activities referred to in clause A or clause B. But as I said, a purposive interpretation will water down that meaning. So now looking at the last leg of my presentation is going to be on the interplay between royalty, FTS, equalization levy, and SCP. Part of it we did cover earlier, but I'm just giving this as a I focused on this so that we can get a little more rather than discussing judicial high thinking. Let us look at what will happen practically on the ground when I interpret SCP provisions, EL provisions, or royalty provisions. I would look at it like this: a transaction which is an SCP in respect of goods, service, or property is the universe. That will be my starting point. This is the widest definition possible, out of which I'll take out equalization levy, which is basically e-commerce supply of or services, which is online supply of goods and online provision of services. I will exclude from the transaction in respect of goods, services, or property. That's the EL part, which goes away, which will be liable for EL. And from both, I will remove royalty and FTS, which is under taxable in India under 115A or 44DA. So this is the order in which I will look at applying the three provisions. Start with SCP, exclude EL, and from both exclude royalty and FTS. Now, I will elaborate on these aspects in this example, in this table. So, what do we have? Let us see the right side in this. I've given the provision so that we are able to relate to the table. Finance Act 16-163 proviso, which was introduced in 2020, provided that consideration received for specified services for e-commerce supply or services shall not include consideration which are taxable as royalty or FTS in India under the Indian Income Tax Act, read with the agreement. That is your DTW agreements under 90 or 91. Similarly, in section 1050 also there is a provision. The 1050 contains an explanation which says income referred to in this clause shall not include any income which is chargeable to tax as royalty, FT or FTS in India, read with the DTW agreement. So what we have, both EL provisions exclude royalty and FTS, so do section 1050. But what is excluded is which is taxable as royalty or FTS in India. The words in 1050 are different, but I believe both will have the same impact, which is chargeable to tax as royalty or FTS in India is what 1050 says. But I believe doesn't make much of a difference. Taxable versus chargeable to tax, I would believe is the same. We are talking about the actual fact of taxation and not a potential taxation. So what we have is taxable as royalty under the Act. Royalty or FTS would be under 115A or 44DA. These are the sections which which give you taxability for royalty and FTS, the taxing rates. Read to the treaty means allocating taxing rights to India. Okay, it is not talking about what is the definition of royalty or FTS under the treaty. It talks about what is the taxing rights. What are the taxing rights under the treaty? Whether taking the taxing rights under the treaty into account, whether it will be taxable as royalty or FTS in India is what needs to be examined. So if you keep that in mind, what we have, let us look at the left side table now. The first column is royalty or FTS under 115A or 44DA. That is basically what is taxable as royalty or FTS in India. Let us focus only on the first column. Let us keep the other columns aside for the moment. If treaty allocates taxing rights to India under Article 12, 13, or even under Article 21, if it is being an NR to NR, it's possible. What happens? If it is R to NR, royalty on FTS or FTS article applies, it will be taxable under the Act, read to the treaty. So once it is taxable under the Act, read to the treaty, EL doesn't apply. If EL doesn't apply, 1050 doesn't apply because 1050 is about what is chargeable to EL. So you have priority being given to royalty or FTS taxable under the Act in the scheme of things. Now, had it been NR to NR transaction, in NR to NR transaction, royalty, it is not taxable as royalty or FTS under 115A or 44DA. If you read 115A or 44DA, they apply only to a payment made by an Indian concern. So if it is a payment made by a foreign, made by a non-resident, 115A and 44DA do not apply. So if they do not apply, they are not taxed as royalty or FTS. If they are not taxable as royalty or FTS, you would have EL applying. Because the exemption what we are talking about is taxable as royalty or FTS is not available, then EL applies. If EL applies, then comes 1050, come to the SCP part, the last column. The last column is section 1050 applies. If EL applies, and your SCP will not apply. Right? So basically, as we discussed, we have to first determine if it is royalty under the Act, taxable as royalty under the Act, it will be under 115A and 44DA. In that case, I do not look any further for EL or SCP. If 115A, 44DA do not apply, EL will apply. Even if treaty allocates taxing rights to India, right? Because it is not EL provisions otherwise override the Act, right? At the end of the day, EL provisions are standalone provisions. In that case, when EL applies, I'm getting an exemption under 1050, right? So Income Tax Act will not apply. If Income Tax Act doesn't apply, the treaty allocating taxing rights to India is irrelevant for me. So that is your column 2. And SCP, if treaty if it is taxable under royalty or FTS under 916 or 7, lay specialist, SCP will not apply. So we have completed the first 2 lines where treaty allocates taxing rights to India. If treaty does not allocate taxing rights to India, in that case, what happens? If R to NR, EL will apply because treaty does not allocate taxing rights. So basically, when I read which are taxable as royalty under the Act, read with the agreement. Agreement says no, you don't have taxing rights. Let us say a make available concept, which is there, which is denies the taxing right to India. In that case, it might be an FTS under 917, but it will not be taxable under the Act, read with the treaty. So this proviso will not trigger. That means EL will apply. If EL applies, I have nothing further to discuss vis-a-vis SCP, because it is anyway not tax. India does not have the taxing rights. If it is NR to NR, again EL applies. I don't have to worry about the other provisions of SCP applicability or not. Last is treaty allocates taxing rights to India, right? But it is as a business income. So if it is a business income, it is royalty and FTS. I would still be covered under 44DA. Under the Act, it will be taxed as royalty. EL will not apply because the proviso triggers the exception in the proviso or exemption available in the proviso triggers. Once exemption in the proviso triggers, EL will not apply. As far as SCP is concerned, if it is covered under 916, the lay specialist, SCP will not apply. And lastly, if it is NR to NR and Article 7, you have, since there is no PE, since there is a PE, EL will not apply, right? That was the situation here also. Question is, can SCP apply? Then I kept a question mark in the sense that if I have a business, EL does not apply. When EL does not apply, is it NR to NR, 115A, 44DA will also not apply? In that case, what happens? Can I say that SCP will, even if I have a PE, SCP will get triggered? I would believe yes. You can still say that, and of course, I welcome other views on this sheet. Any questions? Any comments on this?
Ronak has raised his hand.
Yeah, Ronak. Yeah, please. I can unmute him. No.
No, Ganesh.
Yeah.
On the last, I mean, if you can just elaborate on the last point which you have raised, NR to NR.
Yeah. So
what is your view?
Yeah, my view is we are about applicability of SCP. We are not about applicability of the of Section 90. We are not on that. Obviously, I'll be taxed as under Article 7. Right? If there's a PE, I'll be taxed under Article 7. But
Right.
the presence or absence of SCP may be irrelevant, but technically SCP is present. Why should I deny SCP? So that's why I put a question mark there. I had a doubt. I had a. Huh?
No, appreciate.
So basically, let us look at it like this: if there is a PE, equalization levy does not apply. Right? You have section 165A2, or for that matter, even 165. If there is a permanent establishment of the non-resident who is supplying the services, EL will not apply. Permanent establishment in India, right? And the services are in connection with the permanent establishment, EL will not apply. When EL doesn't apply, it is there is no exclusion under 1050. Right? If there's no exclusion under 1050, I will have to examine a business connection first, a business connection or a SCP first. I will say yes, SCP applies, and then I'll apply treaty to say Article 7, and I'll attribute profits to that PE. I think this is the way I will. This is the flow of my thought. Maybe.
No, I think it's right. Yeah.
Yeah. When I did this slide, my thought was not clear. Thank you, Ronak. You helped me to firm up my thought on that. So this is the way I look at it. Unless there's a domestic taxation, there's no way I will worry about P. No, there's not taxed domestically. So there is a domestic taxation, which is the SCP. I should not be putting a question mark. I should say SCP applies, and then I will apply. I'll apply the treaty and the PE rules, PE attribution rules, to determine the profitability.
Sir, is there a possibility that all three things can be applied simultaneously, and then you have a choice what to apply? I mean, royalty and EL can apply simultaneously, and SCP any which ways, everything will be covered. So do we have a choice that which option can we opt for, or we will have to go with the deletion rule only? I mean, we'll have to deduct that it will get out of royalty. And
yeah. So when the original SCP rules came, when the original EL came 2020 in the last Finance Act, not the last one, the earlier one, that was the interpretation which people were taking, because 1050 was worded in that fashion. That's appeared to be an option, and but they have plugged it. Good amount of discussion happened in all forum, pointing out the lacuna or the loophole, if you can call it that, and they have plugged it. So really today there is no option. Really today the government has sharpened its focus clearly. If there is a royalty or FTS under the Act, you fall under the Act and you pay full 10%, whatever is the rate under 115A, or for the matter on the net basis under 44DA. You don't escape to equalization levy and pay 2% and enjoy the benefit. So the option what you're talking about doesn't exist. Vis-a-vis royalty and SCP, lay specialist applies. You have at least 2-3 judgments or more actually, which give this lay specialist. 916 or 917 are more specific, and they should apply and not SCP. So those provisions again do not give you an option that you can take SCP or you can take this. And I don't know why would I even want to take SCP if I can get out by paying 10% under royalty or FTS. But that apart, I'm not on the commercial soundness of the decision, but there is no option available in any of the three. There are clearly laid down priorities given. You follow that model, that process. This is what I learned from this slide of this. The clearly laid down process is available.
thank you, sir. Thank you.
Ganesh,
Yeah.
I would just like to go back to Ronak's question on NR to NR transfer. So we discussed at length that if we apply SCP provision and if there is no business connection traditionally, in that case, those old provisions will become redundant by SCP, and that is why we should give purpose to interpretation, right?
That is my view. Yeah.
Yeah. So in that case, if it is an NR to NR transfer, and suppose traditional business connection doesn't apply and there is no PE, then even SCP should not apply, right?
NR to NR with a business connection in India?
No business connection in India.
So then India has no taxing interest, no, in a NR to NR transaction when there is no business connection, nor there is any royalty or FTS.
Correct. So we will see the business connection under the traditional limb first. Okay, and if you are out from the traditional limb, okay, so then will you still see, I mean, then explanation 2A and then the user test, etc.
Now I got your question. So your question is there any priority between classical business connection and SCP? Is the question you're asking. So is there any priority, or does one exclude the other, or they both are, there is an overlap and both will have to be read through? Is the question you're asking, was what I think.
Yeah.
When we looked at 917, 9167 and the lay specialist rules, it was about various categories or various items of income. Like you could have a royalty, you could have a business connect, you could have a FTS, you could have a
Capital
interest income, you could have salaries, you could have business, you could have capital gains. There are various items of various specific items which have specific rules, specific definition and specific rules. Now for business connection we have two rules, right? We have two rules. It doesn't say SCP as a separate category of business connection. It says business connection SCP constitutes business connection. Now, where is the term business connection used? In 911 alone. 911 talks about all income accruing or arising through or from a business connection. So, what is a business connection? Classical business connection as well as an SCP. So, we have the same term having two different definitions. One given judicially through R.D. Agarwal onwards, and the second given through 2A. Which is why you have an urgent need, a mandatory requirement to interpret the provisions purposively. Otherwise, how will you exclude one from the other? What is the rule, or what is the rationale, or what is the logic to exclude one from the other?
Right.
I don't know what is the logic. What could be the rationale? Just because there's or you give a priority saying that if there's a classical business connection, don't apply SCP. Or you give a reverse condition that if there's an SCP, it is automatically a business connection. In that case, you might as well delete one explanation 1A and 2. No need to have them. So which is why you need to read them purposefully. So I would not jump to exclude one from the other. I would try to read it purposefully to say 2A applies only to remote operations or operations not physically in India or through others, but operating remotely through automated tools is what I would include under 2A. But as I said, this like people will have definitely other views on this. I'm ready to hear that also. I'd like to learn from that.
Sure.
Sir, we have one more question from Tejas Shah. Sir, if you Tejas, if you could please ask your question.
Yeah. Good evening, sir. Sir,
tell me.
On the point where we're just referring to the sequencing about the classical business connection and SCP, can we just read, or is there possibility of reading that SCP is a meaning into business connection? So business connection was one which was defined, and this is only adding to business connection. So there is no sequencing. Actually, the business connection itself has been broadened. So earlier the meaning was say X, now the meaning has been X plus Y as a business connection. So there is no kind of a confusion which is there. Actually, it is only expanding the meaning of business connection, and hence it's only harmonious.
So that is exactly the intention of the government, is what I believe. They are expanding the understanding of business connection to include SCP. But the problem is not there. Problem is, what is the scope of this so-called SCP? When you look at understanding SCP, what is its scope? Does it also cover classic SCP? If it does, then what will you attribute and where will you reach? Whether you then, in that case, explanation 1A becomes redundant. Explanation 2 is redundant because I might have an agent, I might not have an agent, but there's a transaction in respect of goods, services, or property with a person in India beyond the threshold. What do I need to even look at? Whether there is an operation in India, whether there's a business connection, whether there's a business connection by way of a dependent agent in India. What do I need to look at all that? So that is the confusion. It is not about. There's no doubt that 2A expands the understanding of the word business, of the term business connection. Question is, to what extent it expands? Does it expand to cover even classical business connection? Is what the debate is.
Okay, fine. Because sir, I was just thinking, obviously I'm just reiterating, but the example which I gave in a question earlier, those are the transactions which are actually happening. So if we see, the income is actually accruing to one of the non-resident in India without coming into India. And hence, the person who is actually loading the goods on a ship is acting as an agent. Okay. So there is an agent, but he's a third party. He's not actually, working only solely for one of the non-resident. So in those kind of situations, the transaction and the income which is actually accruing in India for one non-resident, because that transaction is happening within the Indian territorial waters. Okay, the goods have yet not crossed the Indian territorial waters.
So let me let me answer. And I think I got your point. Let me answer it very briefly. If there is an actual accrual for the non-resident in India, then I don't need to look at the entire section 9. Whether it is SCP or not doesn't make any difference to me. If there is an actual accrual in India, you get my point? If there's an actual accrual in India, why should I even look at whether that income which accrues outside India is deemed to accrue in India? I don't need to look at.
No, sir, that point only, when R.D. Agarwal, when this particular issue came up, so wherein it was been, what my limited understanding suggests, that it was an issue about, kind of transactions, or there is a continuous kind of sustained interaction or activities carried out by non-resident in India. That was being looked at.
So you look at one small caveat on what you're saying. Look at explanation 1A. It talks about, in case of a business of which all operations are not carried out in India. That's what it says. It doesn't say it doesn't say in case of a business of which all operations are not carried out by the non-resident in India. The words are missing. If the non-resident is having a presence in India and is carrying out those operations in India, there will be direct accrual. The people are jumping to the conclusion that explanation 1A talks about carrying out of all operations of a non-resident, carrying out of all operations by the non-resident in India. There's no such words. It is actually carried out by a third party. For a business connection implies what? A business outside India having a connection in India. And that connection will normally be another entity by an agent or something else. But suppose it's a branch, then it is not falling under 911 at all. According to me, it falls under direct accrual. It should be taxed as such. Right? Though I might not have answered your question directly because I found it quite long and I couldn't really register the whole fact pattern did not register in my mind. But my point is this: when you have a direct accrual, don't need to look at explanation 2A or for that matter explanation 1. That's my limited point. And to say that explanation 1A requires operations by the non-resident in India is, I think, a misnomer. It is only talking about operations in India carried out. Operations of the operations which are not carried out in India, where all operations are not carried out in India, which implies operations of the business of the non-resident carried out by somebody else in India, like an agent, which is where you have attribution to the agent and whether there can be a dual entity approach and all those issues come up. I'm not getting into all that. So if there's a direct attribution, a direct accrual is there, then I don't need to look at 2A at all. In that case, I go straight away to direct accrual under section 5.
Okay.
Anyway, I might not have really fully addressed your answer, but this is what I gathered, or I jumped to my own conclusions to what your question was.
No, your answer is fully on that question, sir. Thank you.
Thank you. That was my luck. So last slide, and a very interesting slide, is what I thought we should take it up. Now, what is the impact on supply chains in case of a EL? You have an e-commerce operator, FCO 1, supplies goods through the operator to resident customers in India. Let us not deal with FCO 2. We'll look at FCO 2 later. FCO 10 is there. Of course, EL is applicable for e-commerce operator. There's no doubt there. It's all online. Is what I would hasten to add. Section 1050 says any income arising from any specified service, etc., arising from any e-commerce supply or service made or provision or provided or facilitated and chargeable to equalization levy under the chapter. E-commerce operator collects the consideration from the resident customer and passes it on to FCO 1. So consideration received or receivable includes the consideration which e-commerce operator passes on to FCO 1. So when e-commerce operator pays equalization levy, FCO 1 also should get the benefit of the exemption under 1050. Is a proposition I'm making. So when 1050 applies, there can be no SCP. So you have the table below which talks about e-commerce operator liable for EL, FCO 1 eligible for the exemption under 1050, though it is not the one who has paid the EL. EL has been paid by the e-commerce operator, and once it is eligible for exemption, it will also not be SCP provisions will not get attracted to even FCO 1. This is a proposition I'm making. The reason I'm making is, let us look at 165A 3, 1 and 2. I have not reproduced 1. Now let us look at 2. Both are similarly worded. Consideration for provision of services irrespective of whether services provided or facilitated by the e-commerce operator. In 1, it is consideration for supply of services irrespective of whether the goods belong to the e-commerce operator, is what 165A3(1) says. So e-commerce operator will have to perforce include the consideration which it has to pass on to FCO 1 apart from its own service charges or service fee for acting as a platform when it pays EL. In such a case, EL is paid by e-commerce operator, FCO 1 gets the benefit of 1050. It's very logical to me. I don't feel why FCO 1 should not be denied the benefit of 1050 when EL has been fully discharged on the entire consideration, including what FCO 1 gets from the e-commerce operator. But this is, as I said, my view. Others could have different views on this. Let us look at FCO 2. FCO 2 is a PE in India. It's a foreign company in India. I'm not right PE. Okay, sorry. So FCO 2 is a PE in India. It supplies goods through the e-commerce operator to resident customers. So now in this case, what happens? So in this case, it shall not include the items marked in red in 165A3. It shall not include consideration for provision of services which are provided by a person resident in India or by a permanent establishment in India. So e-commerce operator will not pay EL. E-commerce operator will not pay any EL. Question is whether it will be liable for SCP. I would believe yes. Why not? It's a transaction in respect of any good, service, or property. There is no exclusion for the source of that good, service, or property, even if it is from India under SCP. So eco will pay. Eco will not be eligible for EL. It will be liable under SCP. And FCO 2 being in India will be anyway liable for net basis taxation. So this interplay between EL, SCP, and the earlier slides to royalty was very interesting. I hope you people enjoyed it. Any questions? And that's all from me.
Ganesh, I have a question.
Yes, Inesh bhai.
Yeah. The classic situation where we were saying, where Supreme Court in Morgan Stanley said that if you are remunerating all the entities at arm's length, then there is no further attribution, and there will be no further addition to any of the participants of the entire transaction.
Yes, sir.
Will that be given a go by with SCP? If I give everybody what is due to them, why there should be further attribution under SCP? What is your view on that?
First of all, I do not. My personal view is, though I'm totally outnumbered. My personal view is Morgan Stanley is being misinterpreted. What it talked about was the risk of the foreign enterprise. Has it been fully considered when remunerating the Indian enterprise? Is so it is if the entire risk of the foreign enterprise has been remunerated, in that case there is no additional attribution, is what Morgan Stanley said. But what people have ultimately interpreted it as if I give a remuneration to the agent, what is due to him, that nullifies or that satisfies the arm's length price. In that case, there is no further attribution. So I don't believe that is correct. I believe there is always a dual entity approach. There is always an additional attribution required, because why would I pay the agent for the risks which I am bearing abroad? I would never pay the agent for the risks I am bearing abroad. Let us say he is not related to me. Let us say, why would I pay my agent my profits?
Let us take Ganesh, very concrete example. Let's say Mercedes-Benz in Germany.
Yeah.
And Navneet Motors, suppose example, is a dealer in India, which is selling with no connection with Mercedes-Benz and Navneet Motors. Mercedes gives agent, let's say, 20% on MRP to Navneet Motors for selling the car.
Yeah.
If there is a problem in the car, whose risk? It is Navneet Motor risk, because I will not go to drive my car to Germany. I will drive my car to the warehouse or the showroom which is there at Nariman Point or Worli, and I will return back the car. And I will say, give my money back, because I have given you the money. I have not given to Mercedes-Benz. So risk is all to the dealer only.
So the risk,
Mercedes-Benz doesn't come into picture in this scenario. And he is taking that 20% risk, 20% commission, because he is the one who is facing the customer. So I think
let us let's give a different example to what you said. Let us say there is a recall. Eicher Motors has just recalled maybe around 10,000 for 20,000 Royal Enfield bikes because of some problem. I mean, recently it was a news item.
Correct.
There was a recall. The recall implies a cost which will be borne by Eicher Motors to set right the problem in all those bikes which it had already supplied through the dealers.
Correct.
So now, who has taken that risk? The dealers have taken the risk, or the Eicher Motors?
The company, correct.
So now I'm talking about the entrepreneurial risk, which is what this risk is. A product risk or a product liability risk is an entrepreneurial risk, which is what was taken by the multinational. If it is taken by the multinational enterprise, it will never give a return to the agent or to the dealer for undertaking that risk, because the cost will not be borne by them and not by the dealer. So what will happen is, in a recall, it will go back to the manufacturer. Now, in a Mercedes-Benz case, maybe it will not go to Germany. It will go to a service center locally, which will set right the problem, and the costs relating to that service center and the cost relating to setting right the problem will all be borne by the foreign company. If it is going to be borne by the dealer, then dealer will be compensated for it.
Correct. Agreed. But if dealer is given arm's length price, say for example, when MG Morrison garage motors were launched, nobody was buying. The dealer was said, okay, I will give you even 25% commission, but you sell it. But risk was taken by dealer into selling and convincing buyers to buy that product. And don't worry, it will run. Even though it's a Chinese company, don't worry, we are sitting here. Even though UK, but originally parent Chinese, don't worry, we are with you. So that risk is taken by dealer only, actually, not by Morrison Garage.
Ganesh, I'll ask this question: who is doing the business in India? The dealer is doing the business. If dealer is getting rewarded for all the risks,
the parent entity.
Yeah, the parent entity. So the parent entity, by its very nature, will have to retain some risks. Will have to have a suitable reward for that risk. To say that all the risk of the parent enterprise has been considered in the arm's length study of the payment to the agent, I think is a misnomer. Is it really possible that I
suppose Mercedes earns 200% of profit in Germany, dealer earns 20%? It's as per FAR analysis correct distribution, no? Because risk is taken by multinational to produce that German car.
No, so what there's what
And
did
if they
Morgan
earn say 100% margin and this dealer earns say 20% margin, so I think it is fair point. No?
So it is not about the fairness of the margin. It is about the 20%. Does it cover the risks of the foreign enterprise? Is the question is to be asked. It is not about the fairness of the margin. Is whether the risks of the foreign enterprise has it been covered or taken care of in the attribution of the profits to the agent, the commission to the agent. There the problem is. I take your point. If the attribution is fair, where is a problem for further attribution?
Correct.
But it never happens. You can't give your entire profits to the agent.
Unrelated party, then you don't feel that can't be nobody will leave profits in India or nobody will leave profits abroad, no?
So either which way, unrelated or related, at the end of the day, in your arms and study, would you be giving the full attribution for the entire risk? Then it is fine. So that's why I'm saying there will be always two entities: one the non-resident and one the local entity.
Right.
Anyway, but then SAP will have the same
Okay.
same problems will be there in there also.
Right. Okay. Thank you, Ganesh.